Welcome back to Market Movers, where we identify market moving headlines and then discuss ways to either hedge risk or create exposure to affected assets. We have Scott Martin. Hey, Scott.
Hi, Jim.
First, we start the show by going the biggest headline of the week. What's the biggest headline of this week?
The biggest headline of the week, in my opinion, Jim, is the rollout of the SBA loan program that the government has instituted through your local bank, to where they are going to help the small businesses in this country, of which they're a big part of this economy, stay on their feet, get back on their feet as we go through the effects of the virus impact.
Okay, let's move to crude. Okay, they delayed the meeting from the 6th to the 9th. The market took that as believing they weren't as excited about resolving this price war as we hoped they'd be. Is that the right way to take it?
Well, it's maybe more art to the science of resolving this price war, Jim, but I believe it just shows you that there's still a lot of push and pull left in crude here. And if you just look at the crude contract CL, you're going to see that there's been a kind of nice range established here in the last couple weeks in crude, where it's maybe 20 on the downside, possibly close to 30 on the upside. And so it's likely that the crude contract is going to hover and or trade in that range as we figure out the news flow that comes out of OPEC and other players in the market.
Add something to that, Scott. When we were at 20 and we went below 20 a little bit, it definitely did not seem comfortable there and seemed susceptible to any sort of jaw blowing it higher, and it shot higher from that. To me, it seems like a critical level. We know the story. We know that there's a lot of crude. You mentioned the CL contract too. There's also the E-mini futures, which have traded 35,000 early in this day today, and it also has a liquid options market with weeklies, monthlies, and quarterlies. So I think crude is a really interesting trade right now. Moving along to the stocks again. There was 3 days in a row that the news coming out of New York seemed very, very good, and the stocks reflected that. Then all of a sudden, early in this week, there was a bit of a hiccup, and it became more risk off. Do you think the market is hinging too much on New York as a microcosm of the virus's progression?
I think that's fair data for the market to be looking at. I mean, that is kind of the epicenter of where the virus outbreak has been so far. So good data out of New York definitely helps. And I believe too, Jim, that when you look at the equity contracts that are out there available to trade, I'm watching the NASDAQ very closely. The NASDAQ is where a lot of your very strong balance sheet companies are, a lot of where your very strong revenue growth companies are, and where your beta is, which means that that's the additional oomph, that upside or downside, mind you, that's going to happen as we get moves in the market. So as far as the equity side goes, looking at the NQ contract, which again is the NASDAQ, is the place where I've been keeping my eye as I want to take advantage of some of the moves in the equity markets as data comes out.
Okay, to build on what Scott said too, CME has NASDAQ, S&P, Dow, and Russell. Not only the minis, they have the micros and very liquid options market in those. Besides NASDAQ, Scott, would Russell be number two as kind of, if things are going better and the news is better, will Russell be number two for performance in your opinion?
If things are indeed going better, it would show up in the Russell as well, Jim, because you are going to get some additional beta out of the Russell as well. I just tend to like the NASDAQ a little better right now because of the strength in the companies that are in there with respect to their balance sheets.
Good point made. Thank you for joining us on Market Movers, where we are helping to make you a better trader.